afternoon, everyone, and thank you for joining us. This is the 3 Mexican silver stocks to watch in 2020. So unfortunately, we are down to 2 CEOs, but nonetheless, we've got a great panel of CEOs here for you today to talk about silver, mining in Mexico, and their respective companies. Short disclaimer here. Okay, so your panel of CEOs today are Mike Konnert of Vizsla Resources, ticker symbol VZLA on the venture, and Taj Singh of Discovery Metals, ticker symbol DSV on the venture. And I am your moderator. My name is Justin Hayek. I'm an investment advisor here in Vancouver with PI Financial. So before we get into the questions and discussion portion of the presentation, a little bit of context. So I want you to understand how important silver production is, or Mexico is for silver production. So Mexico is synonymous with silver. Of the 10 largest silver producing countries in the world, Mexico is number one, was number one as well as in 2017, and accounted for about 23-24% of global production. And of course, with big production comes big mines. So of the 10 largest silver mines in the world, primary silver mines, 5 are in Mexico. So again, Mexico is synonymous with silver. You had the choice, I suppose, of going into silver versus gold. Taj, maybe you can explain why you decided to go after a silver project, be it Cordero versus a gold project.
Well, to be honest, we're pretty agnostic on gold or silver. To be honest, like if there was a good gold project nearby, we would definitely be interested in looking at it if it made sense. We just are really looking for high impact, high kind of margin projects. We don't really care what the commodity is, especially if it's precious metals, and the flow sheets for gold and silver are actually quite similar. So in terms of that, we're not specifically only looking for silver. I will say though, in the market that we're in right now, I think it's definitely, and I'm trying not to be biased here, but it's a lot more favorable for silver. The gold-silver ratio needs to be corrected substantially. 60 to 1 seems normal. If just depending on who you talk to, it's even lower than that, 20 or 30 to 1, and we're talking about 85 or 90 to 1. So just a gold-silver ratio correction itself, if silver corrected itself to what gold is now, silver would be over $20. It'd be close to $22. And the other thing is, historically in a bull market, it's very well known, silver significantly outperforms gold in a bull market.
That's right.
Well, thank you. Thanks for having us on here, Justin. And I think that why we chose to go into silver over gold was because silver has all the characteristics of a currency that gold does, and has all the same impact in an inflationary period as gold does. But what gold doesn't have is the same level of technological applications as a metal. And you'll see that in solar panels and electric vehicles and computing, all types of things like that. So where you get the same type of leverage to currency and debasement in gold, you also see some more, I think, torque on the technological side of that as well too. So that's why we're excited about silver.
Okay. So both companies have their primary projects in Mexico, right? Commercial mining in Mexico dates back over 500 years, giving prospectors and miners, plenty of opportunity and time to make discoveries. Yet there's still new major deposits being discovered today, i.e. Silver Crest Las Chipas. Why do you think this is?
Yeah, the artisanal mining methods used in Mexico, they were very good at it. And it's when you go and do some due diligence on these assets, you can't believe that these guys didn't drill anything. They didn't have geophysics or anything. Their ability to visually mine, if you will, was fantastic. But the fact is, something that wasn't economic years ago, centuries ago, is definitely economic now. We know that, and obviously technology improvements in mining methods, process engineering, recovery methods, etc., exploration methods have all made it that ore that wasn't economic centuries ago is now clearly economic, and the ability to discover and define has increased substantially because of all the technology that's available out there.
From my perspective, I think the reason that there's so many opportunities in silver mining and in deposits in Mexico whereas other places in the world, like Nevada, have been developed further, is because of the nationalization, I think, that begun in 1917 in Mexico, and it wasn't until 1992 that the mining code was opened up to allow for foreign investment. So that was, an area, a duration of time where there's technology was applied to exploration, where in other places like Nevada, which has similar geology, they were using new technology to find deposits. However, for that period of time in Mexico, it was actually underexplored, and so that's why these opportunities like Discovery or like the Panuco exist today.
Yeah, great point. So Mexico is in the news at times, more recently due to cartel activity, unfortunately. How has this impacted operations, if at all, and what precautions have you taken?
For us, there's we have a standard protocol we follow in country. We've been working there as a team for over 10 years. I personally have been there for 10 years. We ran an operating gold mine in Sonora. We ran an advanced stage development project in Guerrero. So we've been around, as well as several other states. Cartel activity will always be there. The target is not Canadian companies at all. It's typically cartel activity. Sometimes it gets heightened, but honestly, we find that if you follow the kind of standard safety procedures, not traveling at night, having vehicles clearly marked, making sure community engagement is high, and staying in touch with the communities around you, it's not usually a problem at all for us. So it hasn't impacted us.
Okay. Mike?
Yeah, I would say that, I would echo the same thing. It's Mexico is a place that has its own type of risk compared to other places in the world. But it's not as bad as some places in Africa or other places, and there's a way to mitigate those risks. And as a company, we don't engage any cartels, but we keep to ourselves and stay in the right places in town. And like you said, don't drive at night. And it's an established methodology on how to protect yourselves from those issues. And I think how many companies are there operating in Mexico now that are Canadian without constant issues? So.
Okay.
Another point, Justin, sorry, that's a good point by Michael, is the fact that all of these countries that people operate in, I worked in Brazil for 3 years, there's a lot more kind of criminal activity in other countries that doesn't get brought up as much. I think because Mexico's close to us, it's sort of a neighbor, we see it more, but in any of these countries, there's areas that you just don't go to, and it should be part of your DD before you get into that project and that asset.
The Netflix series don't help us.
No, definitely not.
Okay. So I want to pit the two of you against one another here for a second. So each company has two very different style of projects. One with Taj Cordero project being the sort of lower grade bulk tonnage, at least that's how it was developed, style of project. And Michael with Vizsla's Panuco project potentially shaping up to be a high grade kind of low tonnage epithermal project. So why is your particular style of project superior?
It's a good question. I like both open pit and underground mining, but and ultimately, guys, Cordero was a bulk tonnage, big open pit.
Yeah.
It may not be that. I will, Discovery's completely looking at it from a different angle. It may be a combination open pit underground, but the general reasons why, what are the favorable characteristics of open pit mining? The drilling is a lot easier. The spacing, when you have to have a resource or an indicated or measured and indicated resource, the spacing requirements are much less. You can usually have much longer mine lives. In underground, you're always kind of fighting for 2-3 years of mine life, so you're kind of the NPV of the asset is sometimes comes into question until you drill out more reserves. Except mining is much easier at open pit, load haul, etc. And a big thing also is the sustaining capex of an underground mine is a huge cost that obviously isn't as much of an issue at all in an open pit mine.
I think, generally speaking, trying to find narrow vein, high grade, not that ours is narrow vein, but, trying to find narrow vein, high grade epithermal deposits can be tough. So if you're looking at it, generally speaking, across the globe, you might think, okay, well, if I'm going to go set out to find these things, I might find it to be expensive. I might find it to be difficult to find. But a lot of the work that's been done over the last 450 years at Panuco in production has actually made that a lot easier for us and a lot quicker. So we benefit from the centers of production on the Panuco. We can go into the adits, sample down 5-6 levels down, sampling the vein as it goes, and really get to understand how the system works. So for us, a lot of that work has been done for us, and we can piggyback off of that. But I think the real reason you would want to get involved in a story that has high grade, less tonnage than a bulk tonnage is because of margin, operating margin, and kind of a rapid payback period. And that's what we're trying to do here with Vizsla, is find an ore chute that has the highest grade and make a quick payback of the option.
Now, I understand you're going to be limited in terms of your answers here, what you could say, but are you looking at any additional acquisitions? And what would your preference be, grassroots exploration or something with ounces in the ground already proven?
Listen, we're always looking for assets that make sense, tuck-in or bolt-in acquisitions. You always got to be looking around where, you can get in at a very attractive entry point and you can really add value. For right now, I think discoveries really, if we did do something, it would be something with ounces in the ground. And the reason for that is the way valuations are, it's extremely attractive entry point to come in with something that already has ounces in the ground. Much less risk, obviously, but it's we really feel there's a huge gap between kind of standard in situ ounces in the ground versus what they actually historically trade at. And again, obviously, the less risk.
Yeah.
I think as a company, we always have to be looking at new acquisitions. So we do. But I think, for us, the obvious answer would be ounces in the ground to help us, build a base on the valuation.
Okay. To add to that, would you be looking predominantly at gold projects or silver projects, or agnostic?
Yeah, gold, silver is what we'd be looking at, either one of them.
Yeah. Mike?
But precious metals.
Yeah, precious metals as well.
Yeah, okay. Exploration company, developer, producer, which one do you think investors should be investing in right now in this part of the cycle? What appears to be early stages or early innings of a bull market, or at least hopefully, in the precious metal sector?
Yeah, listen, in my opinion, I think you're going to make money across the board, but you've just got much, much more torque with an explorer and developer. You've probably got the most torque with an explorer, but you're taking on the risk. With a developer, or kind of a combination explorer-developer, which I think we are. It's not like we've got a project and we're only going right to a fees. We're exploring and developing at the same time. You've probably got the biggest bang for your buck in this part of the cycle. Again, where valuations are extremely low compared to historical kind of PNAVs or even dollar per ounce kind of valuations. You can see historically from many bull markets, the developers and explorers definitely by multiples outperform a producer. And also one of our largest shareholders, Eric Sprott, who owns 21%, always goes for the smaller codes, explorers and producers, and I'll do whatever he does because he makes money.
Yeah.
That's a good answer.
Mike?
I would be looking at something, of course I'm biased, but I would be looking at something exactly like Vizsla, something that you can have the drill discovery phase over a couple year period, and then have this company that could rapidly move into production. I think that as the cycle grows a little bit longer in the tooth, you'd be able to expose yourself to a number of different scenarios for capital appreciation, and then the potential for having those ounces that you found be re-rated at a higher per ounce value as you move into production.
Yeah, great point. Taj, you want to go back? So you'd mentioned that Eric Sprott's a significant shareholder of Discovery. Why do you think that is? What was it about Cordero or the company itself, Discovery, that attracted him to come in and invest? What was the dollar figure that he invested recently? $12 million?
He invested $12 million over two financings in 2019. In total, we raised $28 million. And the reason is for Eric, I'm pretty sure, is he has a history with us. He knows us from previous investments and trusts us with his money, hopefully. But really, it was the torque. I mean, our asset is one of the world's largest undeveloped silver resources. And you'd not only get the leverage when silver price increases on the value per ton of the ore going up, but also more and more and more, significantly more ore becomes economic as silver price increases.
Yeah.
And the kind of NPV increases you get with just $2 or $3 kind of silver price increases is huge, sometimes 40, 50% specifically at Cordero. So the leverage is the main thing, I think. Eric is believes silver is going to be about $30 by the end of this year, and ultimately he does believe it'll go to $100. He thinks the gold-silver ratio, he thinks, is going to 15 to 1.
Wow.
So he's a silver bull if there was one.
Okay. So I want to give the two of you each an opportunity to, if you will, give the elevator pitch. So we've got a little bit of time here to spare. So if you will, maybe some catalysts to come over the next 6 to 12 months with both Discovery and Vizsla, if you don't mind.
Do you want to go first?
Sure. Yeah. No problem. So Vizsla is developing the Panuco district in southern Sinaloa, Mexico. We have a very large district-scale, high-grade silver camp. It's been in production for 450 years. It's never seen modern exploration. It's never seen modern systematic exploration. We have an option on all the production infrastructure on that project. And as I alluded to before, we could essentially move from a drill discoverer, which we're doing right now. We're going to be the most aggressive drilling junior in Mexico in 2020. And we're going to move from drilling to defining a resource, and then ultimately deciding whether or not to exercise the option on the back end of production. So in this coming metals market, we can see all of those things from drilling, discovery, development to production in a rapid period of time. We have, I'll give some stats too. We have 55 million shares outstanding. We just raised $6 million without a warrant, and our share price over the last 12 months has increased from 13 cents to, I believe, 96 cents today. So it's an exciting time to be a shareholder of Vizsla.
Another all-time high today.
That's right.
Congrats.
Thank you.
Taj?
Yeah, the pitch on Discovery is, again, it lies in the leverage is one thing. It's one of the world's largest silver deposits, so if you think silver is going up, your upside is, there's no other really name that can match the leverage and the torque we have, number one. Number two is this is an asset that we believe is a world-class asset that has a very high-grade core in the corridor that will be economic, in our view, at $17 silver, so you're protected on the downside. We think we can show a project that's worth multiples more than the valuation we're getting for at 17 silver, and then has all the optionality of if silver takes a run. And I'm talking about, right now, based on the old study, $4 or $5 increase in silver price increases the NPV by 50%, 60% in some cases. We're funded. That's a big thing. We've got $24 million in the till. Great shareholder base. Eric owns 21%. We've got a great institutional shareholding, and we have a 30,000 meter drill program we're in the middle of. So every 3-4 weeks there's going to be news coming out, and ultimately we're working towards a resource by the end of 2020, an updated, robust, revamped resource that works now, and then work towards an economic study in 2021. And we really think if we just can execute on the plan, we're in for a great 2020. We've been notified that we are the TSX Venture 50 for 2019, which is a prestigious award. So that's across all sectors, the top 50 companies on the venture. And again, we think we're really poised to continue that into 2020.
You got me as a shareholder too, so you got that going for you.
Exactly, for sure.
So that concludes our discussion panel. Thank you everybody for joining us, and enjoy the rest of the conference. Thank you.